Good evening, everyone. This is Chrissy from Solstice ATR. Before I do get started, Merry Christmas, and I wish all the best for everyone in 2022. You can find us on Solstice ATR, Twitter, Instagram, my Discord ID. We use technical analysis and data and technical algorithm for trading. We're not a broker dealer. Past performance does not indicate future results. Use at your own risk, and the data may not be copied without checking out the website policy and asking for permission. Let's first start by taking a look at some of the different sectors that I'd like to cover for this short video. 14 different sectors to cover into the Santa rally. We're going to look at Schwab, growth, VTV value, XLK, the VIX, BKLN, which is the banks and the loans short-term, mid-term, XLF financial, XLE, XLP, the Bitcoin ETF, TLT, the bond market, NYI, the New York Composite, and the SPY, some futures, some stocks, and Bitcoin. Let's first start by taking a look at the first indication. I do have the NYA. I usually start a little differently, but today, since I had it on the chart, this is the composite for the New York Stock Exchange. You can see we are in consolidation after the reset because of the variant in a virus. You know how we had the COVID-19 in 2020. We had a small little reaction of the variant that we had recently in the last couple of week or so. It gave us a reset, and we eventually reversed and came back up to the middle of the range. Let's keep an eye what we can do by taking a look at the, first of all, the SPX, which is the S&P 500. We know we have reset in this area at the 44.95 and eventually reversed back up. We came back to the channel. We touched the 89 EMA and reversed back, cleared the 50 and the 18 simple moving average. The most important thing we created in the last week is, so like 3 weeks ago, an annual high. We almost triple topped and trying to get another breakout before end of the year. And that's what I would call a Christmas rally. So let's take a look at now the NDX. We can see that the NASDAQ created a couple of weeks ago an annual high. We created a W. We're trying to see if we can break out of this small wedge here at the 16,400, 16,500 in order to continue higher. We have cleared the 89 EMA, the 50 simple moving average, and the 18. The 18 is usually the midpoint of the Bollinger Band. And let's go to the third one. Let's take a look at small cap in relationship to RUT. We can see that the RUT was range bound throughout the year. We looked up recently in November and eventually we fell back down. We came back 1/3 of the move. We're still underneath the 116 simple moving average, the 89 EMA, and the 50 simple moving average, but we have cleared the 18 simple moving average and we broke above it. Does this mean we can continue to the 50 Fibonacci and the 61, or do we get a rejection, which is formation of a double hook? Let's take a look at the Dow Joe Industrial Average, $ DJI, $DJI. We can see that the Dow Joe Industrial Average, we were inside of a linear regression channel. We eventually broke out of it. We're going to remove this one. We're going to connect this one. We are coming out of a symmetrical triangle. As you can see, we have that symmetrical triangle. We have an open con which no longer valid because it broke below it and came back up, but we are still in an uptrend trying to get to this channel. If we eventually break that double top here and the third one here, we can get a shorter one from here to here. You can see it's a little bit more tighter than the upper linear regression up channel. We are above the 50%. We're above the 50 simple moving average. We're above the 18, we're above the 89 and the 116, we're above the 38.2. If we take the high and low from here, this is 100% of it. Are we going to continue higher or not? Keep an open mind what the market does to us. Let's take a look at the BTC, Bitcoin. We can see Bitcoin has been range bound after falling from the 68,000 area falling back into the 47,000. It consolidated for a couple of weeks in this range, trying to get a breakout. Keep an eye on that gap fill if it's going to clear this candle here. The height of it is actually 52,200 almost. We can zoom in here so everyone can see it. It's this candle here. If we do double top, or do we create another handle here, or do we fall through that linear regression channel? We do have this gap. We do have this gap which was partially filled. We still have one at the bottom on the other side because it can create a cup and handle. It depends what the market wants to do. Let's take a look at Ethereum ETH. We can see at the Ethereum had filled this gap in this area here at the 3640 and eventually reverse back. If this is going to continue, it has to clear the 18 midpoint, as well as, the Bollinger Band. 50 simple moving average is right above it. We are just tapping into the 38.2 fib. Let's see what it does next week. Let's go back now to GC gold. It's going to be a lot of consolidation in this chart, a lot of fibs, a lot of channels that we're trying to get out of. We came down into that linear regression symmetrical triangle. We eventually retested that high up here. We're trying to break out. We fell back in range and we continued to consolidate for a couple of weeks. In the last week or so, we had that push up from the fear of the variant virus and COVID. We fell back in and we're trying to recover, and we cleared the 1805. Very important area that we have to clear. If you look at this candle, that was 1820, and this candle was around 1811, and this one was about 1815. If we can clear this and run up in this linear regression channel, I think that 50 Fibonacci 61.8 will be revisited. This is the candle that brought us down. Do we end up continuing halfway through it, consolidate, make a cup, or do we break out and eventually get to the 1900? Keep an eye on what gold does for us. Let's take a look at CL, crude oil. Crude oil, as we can see, this bar that took us down last because of the change in the inventory and the supply and demands. They brought the price back down. It created like almost like a wedge. Is trying to break out of the 89 EMA 116 simple moving average. Does it clear the 50 Fibonacci in order to continue to the 61 and the 50 simple moving average? That's crude oil. Let's go now take a look at some of the ETFs that I wanted to cover. We're going to start with NYA. We did it a little bit before. You can see it's in consolidation, trying to get back to the annual high from November. Does it get there or not? We have to keep an open mind. We are in a downtrend wedge. We have to break this wedge in order in the 50 simple moving average and the 61 in order to continue higher, or do we hold the 18 simple moving average? Keep an eye on the overall New York stock composite. We're going to look at SCHG. This is the growth from Schwab ETF fund. We can see that the ETF fund is similar to the SPY, the spiders, because this is a large cap growth account. It concentrates on large cap growth companies, such as Amazon, Google, Netflixes, Apples of the world, the Teslas of the world. So I want you to have an open mind if there is going to be sector rotation. So this is one to take a look at. And if we take a look at VTV, this is more of a Vanguard Value ETF, you can see that the value starting now to switch from technology company, because if the technology sector gets a little bit hit, we have to look at some value plays and other instruments to keep an eye. We created an annual high the week before, and eventually this week we tried to rally up on momentum for the Christmas holiday. This was the annual high in the value. Let's take a look at now XLK, which is the technology sector. You can see where the technology is in relationship to where we are today. We can take a look at the financial XLF. We can see that the financial sector is trying to come back up, but we are in a linear regression down channel. We can connect this dot either to this one here or this candle here, or we can go all the way up. We can see that we tapped once, twice, 3 times, 4 times almost. If this is going to break up, we have to keep an eye on the 61.8 and the 50 Fibonacci and the 50 simple moving average and the 116 SMA and the 89 EMA. Let's take a look at now XLE. XLE is basically part of the energy sector. We're going to keep an eye on the energy sector. You can see that the channels has been done here nicely. We are above the 200 simple moving average, the 116, the 89 EMA, but we still have the 18, which we tapped into, and the 50 simple moving average. Do we clear the 50 Fibonacci 61 in order to get back to that channel? So I'm trying just to go over these things to show you that there is a change. We have to keep an open mind on these different sectors. Let's take a look at XLP, which is, the consumer staples. We can see that the consumer staples, a week before we made an annual high, we fell back in due to the variant, and we're pushing back up. We are above the 18 and the 50 simple moving average and the 116. So far, we are in an uptrend. Let's take a look at the TLT, which is the 30-year, the 20-year Treasury note. You can see that the bond market, since the par value of that bond has came down, does the Federal Reserve Board keep interest rates low, or are they gonna nickel them up a bit by bit and pull money out of the market and the sector rotations from the banks for consumers to borrow money? So we have to keep an eye on it. I did not do GBTC, which is the ETF fund for Bitcoin. You can see where it is in relationship to those moves. We are underneath the 200, the 116, the 89 EMA, the 38%, the 50 Fib, and the 50 SMA. We are tapping into the 18 simple moving average in this down channel. Does this mean it can continue higher or get rejection? Keep an open mind on technicals, not what you trade, what you see in the charts, not what you think. Let's take a look at the IWM. IWM is the small cap Russell 2000. IWN is the value play. We can see we are underneath, we're back inside that range for the last 12 months. We looked up in November, we eventually fell back down. Does this mean that the Russell and the value play can come back up and start to change in direction in relationship to where we are? Let's take a look at the VIX, which is the VIX. The VIX, we can see on that spike of the variant in the COVID, we spiked higher. We eventually fell back down. We are below that $25 range. As long as we are above that 25, 25.50, there's no fear in the market. In relationship, if we go back 3 years in history, we can go back like a 3-year chart. We can see that in February, when this reaction happened till March 29 or March 23rd, we had a large spike up. But the fear gauge, like when we had it here, you can see that the move up and coming back down is not the same as what happened in November this year, 2021, in relationship to what happened in February last year. So let's go back to the charts. We're going to go to time frame. We're going to go daily instead of 3-year. We're going to go to 9 month. We don't have to go that far out because we're going to finish this video in a short period of time. I want you to have an open mind on these different sectors. We're going to look at one more, which I did not show you. I showed you the XLK, but I'm going to do the QQQ or the composite, which is the NDX or the $COMP/Q. So you can see the differences. This is the NASDAQ 100 ETF, or you can use the XLK. You can see in relationship where that NASDAQ is trying to get out of that linear regression down channel, trying to break above that $401, $402 in order to get to the annual high of this year. Let's go back to the ES. I want to go back to the ES and I want to break it down on 4-hour chart to show you where we are in relationship to those 30 days range. We can see we've been range bound for the last 3 weeks. Came down, looked back up, came down, looked back up on the federal announcement. We fell back down because of the fear that's happening due to that variant in Europe and Africa, in India, and the Asian markets. We had that drop. Then eventually we spiked back up due to that Christmas rally. Does this Christmas rally till end of the year continue higher to Santa Claus rally, or do we end up reversing back to the mean and coming back to the middle of this range? So trade what you see, not what you think. I just wanted you to show you that from 3 weeks ago, we had these spikes. We had the head, shoulder, I mean, this is the shoulder, this is the head, this is the shoulder, and eventually fell down. Then we created another push higher. This is a shoulder, this is a head. I mean, like a shoulder, this is a head, or inverted W or M, whatever you want to call it. Then we fell back in and we eventually broke through that channel to the prior highs. Every time you knock on the top a couple of times, eventually that door opens. If that door opens and clears, we look for a new high in the angle. If we end up falling below the 4700 or 4710, keep an open mind that the market can change on a dime. Trade what you see in the sentiment. And the most important thing, I want everyone to take this into consideration. Whenever you go to visit a doctor, you usually go get your blood pressure checked, then they look at your pulse, your heart rate, and they do blood analysis and urine, stuff like that. When you are evaluating a stock or you're evaluating the overall market, you have to look at the breadth of the market, the New York Composite, the NASDAQ. You have to look at the S&P to see your vitals, correct? So most important, looking at the tick of the charts, $TICK, which will give you a little bit of pulse of your heart. If your heart is moving to the upside, moving and the pulse is there and it's beating, you are alive, you're not dead, so you're moving higher. If the advanced decline line or the volume is a little bit to the downside and changes the trend from positive to negative, you have to change what's the direction of the move. So this is a good example to give you about the overall market. I hope this was helpful. I hope 2022 and Christmas will be great for you guys, and enjoy the rest of the long weekend. Take care.